Okay, mi familia, welcome to Highest Forex. I am African Rebel. This is where we guide traders from foundations to freedom. As you all know, I am obsessed or used to trading synthetic index. I always trade the volatility index. But today, this morning, we was looking at gold in my community and we all decided to trade gold. Let's see. This is our mentorship Telegram Discord, and this morning we had analysis, a good setup from Jackson. Big ups to you, bro. You're always pushing us. So we had a good setup from Jackson, and I also looked at it myself. Though we executed earlier, we had a sell. We all had a sell, all right, and then we were stopped out. Though it was a break even, okay, we was stopped out. It was a break even, and then we reanalyzed and then we got a better entry. So how did we get a better entry? And you can see after the second entry we smashed our TP very nice and even went beyond. So I want you guys to look at, I want to show you guys how we're able to read out this market. Even when we took first stop loss, we were able to read to see further that yeah, it's going to play out. So without wasting much of our time, let's get started. So guys, this is XAUSD. This is good, right? And you can look at, if you can see my time frame. My time frame, there are 1 2 3. I only have the 1 hour time frame, the 5 minute time frame, and the 1 minute time frame for execution, right? I always preach to you guys to look on the lower time frame so that you can keep your stop tight. And also, as a day trader, you have to look at lower time frame so that you can get in and out of trade before your trading session runs out for the day, right? So, but for gold, I took my analysis to the 1 hour because of the fact that I am used to the synthetic market. And one thing about trading is you are never a boss in anything, so you have to be careful. So I needed the higher time frame to look at an overall direction before I use my lower time frames for the entry and for better scaling. All right, so we had on the 1 hour we had this structure, and you guys know already, when you have structures you have to be concerned with the current ones. The current structure is what you are looking at. After getting the highest point, lowest point, the current pattern, then whatever it does there, you react with it. All right, so the highest point we had in the morning was this level. We actually met the market around this here. We met the market. I made a market here this morning when I woke up. Okay, so this was the highest point we had, and from the pattern I'm having, I had this as my lowest point. Why? Because I see that this whole thing is a price channel. The price is diving up, creating higher highs and lower highs. Okay, sorry, higher highs and higher lows. So from there, I saw I could connect my trend line 1 2 and 3. All right, so because I have 1 2 3 from trend line trading or from pattern trading, we know that when we have a third touch on the trend line, resistive trend line, we need to drop harder. All right, and we have a third touch on the supportive one, we need to go harder. So we already missed all of this because yeah, it happened like Thursday or Friday, but we here today's Monday and we met the market around this level. So wanted to see if we can still join the trend or not. So with having this resistive trend line, we have this side as the supportive ends, 1 2. We have this side as supportive end. So we made a market here, and the market is yet to complete our trend line movement, right? Because we know this is an ascending structure that is going up, creating higher highs and higher lows. So we know that the market have to come to this level because we met it here. So we know that the market have to find its way down, and then we know that every time the market leaves a trend line, it gives an impulse, then a correction, then an impulse and a correction. So the phase we were here is a corrective phase, even from the higher time frame, from the time frame we looked at it, which is the 1 hour time frame. This was a corrective phase after the impulse correction. So we know we need an impulsive move to the downside, okay, to confirm me that it is an impulse correction and what an impulse. So from there I went to the 5 minute, and after the 5 minutes was the 1 minute. Okay, so let's go to the 5 minute and I'll show you what I looked at on the 5 minute before putting the trade into consideration. So when I go to the 5 minute, okay, like I tell you guys, whenever you go down the time frames, your focal point is the current price. Whatever you are doing, your focal point is the current price. What is happening right now in the market is what you're supposed to be doing, because it's what's happening now that tells you what will happen next. What has happened before has shown you what is happening now. So what's happening right now in the market tells you what's going to happen next. Okay, so when I came to the price, I told you guys we made price around this level. So we had this impulse, and then we are having this swing being created. So clearly we know we are supposed to just connect our trend line, because this swing and this one was already created when we met it. We made the price around this level. So we connected this ascending trend line, supportive one to the outside. So we have high, we have a low here, and then we have a higher low there. And then from there, so we had this swing created, and this was the swing that we executed our trade from. So we're contemplating, we're like, at first I told you guys we took an L. So we had this first from this rejection. We had a trade there. We had a trade there from this rejection, but we took an L. So when the market went above, it came right back into the swing. That is when we knew that yes, the market is going to sell off. Like I taught you guys in this channel, those of you that still remember the sweep and sweep stuff, this was a sweep. This isn't a significant break. We only have a candle out, and then the other candle came back inside the rally. So it is a sweep. So we know that, yeah, we're supposed to evolve our trend line from here to that place, because this guy is only went up, only went like what trend liners will call fake out. So it was only a fake out. It was only a fake out, not a significant break. So because we know it's a fake out, and then from a higher time frame, we know that we're supposed to be looking for sales. When we got here, we knew that, yeah, the sell is supposed to happen. So we had a sweep here, and then we started selling down. So for those of you in the community, you know the further confirmations we look to the on the 1 minute before we execute our trade, and you can see on my screen how tight our stop losses are and how high our reward is, because we always go to a 1 minute time frame using our entry criteria to fetch us sniper entries in the market. So if you want to understand how to face these kind of entries in the market, please look in the description below and come to us for proper mentorship. So this is how we were able to analyze the directional bias of gold today, and you can see we killed it. Though we took our profit on the third touch, of this trend line. Reason being that this is the third touch here, and then you can see from the ascending side, you can see from the resistive trend line, that there was a probability of the market rejecting here and coming for the third touch before finding its way down. That probability was there. So in order for us to pay ourselves with what the market has provided us, and then there was a reason that, yeah, it might not continue like this to the downside like gold did. So we had to take our profit here, which is pretty nice. We took a 1 ratio 12.99 risk to reward ratio, which is a perfect trade. So please, if you enjoyed this video, please give us a thumbs up, say us your comment in the comment sections, and thanks for watching.